Hi everyone, Alan Adams here. Today is April 24th and today I'm going to record a brief video to address the 7 problems in Chapter 7 that I asked you all to try as part of our homework. The first one we're going to look at, and I've called up our Flat Wheel Knowledge e-text right over here, which you should see on the far right of your screen. The first one I asked you to try was number 3. Pure and simple, what type of an account is the allowance for doubtful accounts? I introduced that account to you, and let's label this as problem number 3 rather. Hold on, please. Pure and simple, it is the first contra asset account that I've introduced you to. There are many types of contra accounts, so this particular one is a contra asset. The correct answer, therefore, is going to be number 3. Let's write that down first. Answer is C, actually. And what is a contra asset account? Okay. A contra asset account operates alongside of the related asset account, which in this case is accounts receivable. And you have to look at them together. Okay, now a contra, opposite, mirror image, is going to break the rules of an asset and do exactly the opposite. So when you look at the allowance account alongside of accounts receivable, it will normally have a credit balance. So when you take the debit balance of accounts receivable and you subtract or combine the credit balance in the allowance, the difference is what we call net realizable value. In the best estimate of management, how many of those receivables net will you really collect? The correct answer, therefore, is C. It is a contra asset account. Okay, the next problem I asked you to try was number 4. Let's have a look at that one. Which accounting principle guides the timing of reporting of bad debt expense? Okay. If I sell you something on credit, I've recorded the sale, and now you owe me the money. It's an account receivable. And we get in a dispute, and I keep holding on to that receivable because I plan to collect it, but things look worse and worse and worse, and finally I write your account off. Well, by now, a year or 2 years might have passed as we resolve our dispute. So, instead of doing that, which breaks the matching principle, what instead we're going to do is record the allowance, our best guess of how much I really might have to end up writing off in the future. And by recording that expense now and setting up that allowance account, I'm recording the expense in the same period as the sale that gave rise to it. That is matching. So the correct answer, therefore, is going to be item A. Matching, okay? We are placing the revenue along with the related expense. The next one I asked you to try, I'm going pretty fast here, but you can get back to me anytime with questions. I asked you to try number 6. Okay, we have an accountant who's looking at his receivables at the end of the year. At the end of that year, as he's closing up his accounts, we have receivables of $1,250,000, and the little bucket, the contra account, the allowance account, has a credit balance of $75,000. And then the boss comes to the accountant and says that we've got a customer who owes us $15,000 that's buried in that $1,250,000, and he's not going to be able to pay it. We're going to write it off. The question is, what is the net realizable value of the receivables before and after the write-off? All right. Well, let's actually write down a before and after. Accounts receivable, and the allowance, okay? And if I take away one from the other, and being a good accountant, I'm just going to put lines down here. That means, double border, that my net realizable value, and let me just add one more over here too. Okay, here's what I'm going to do. I'm going to show you before. I'm going to show you the write-off, and I'm going to show you the after. Okay? So the difference between accounts receivable and the allowance for bad debts is called the net realizable value, as we already know. Okay? All right, let me just make B a little bit bigger there. Get a little more space. There we are. And I'll hit save so I don't lose this work. All right, now let's look back. We had $1,250,000 before, and I did run out of space there. Hold on. There it is. I don't need pennies, so let's get rid of those. There we are. Okay, the allowance, it says in the problem, was $75,000. All right, now this is a debit balance. That's a credit balance, so I'm just going to take that one minus that one. So we have a net realizable value, before we do this write-off of $1,175,000. Now, the question is, what is the before and after? Okay, look at the possible choices we have. All right, we see that it's got to be either A or B. That's the 1175, but it's asking us for a second number as well. So let's write this person off. Now, we've already provided for the expense, so we're not going to record any expense now as we write this off. That happened in the past. But what we are going to do is get rid of the receivable and use up part of what's in that allowance. Take a little water out of the bucket, you might say. So I'm going to show that as a negative number in both cases. Okay. Now you'll notice that you credit that account, debit that account, and there is no effect on net realizable value. So what do you have in these accounts afterwards? Okay, you've got $1,235,000 there. Okay, you've got $60,000 here. So if I take my new receivables after this write-off, less what's left in that allowance bucket, I still have $1,175,000. Okay, the correct answer therefore is going to be item B. All right, I had $1,175,000 before. I've got $1,175,000 after, and here's my proof of exactly why with the changes. I hope that that's clear to you. Okay, the next problem that I asked you all to try is problem number 7. So let's take a look and see what it says. Okay, a company is preparing to do their financials. The balance sheet being created shows total assets of $800,000, total liabilities of $600. That means our equity is $200, right? The difference. Okay, and one account receivable is determined to be uncollectible and is written off. A different receivable for $5,000 is collected. Nothing else happens. What should the company now report as the total of its assets? Okay. Total assets. Well, you know what? Let's actually write down debits and credits and make the entries. Now, the first item we have is we're going to write off a receivable. Okay. And that, as we just proved up here, that means when you write off a receivable, accounts receivable net realizable value does not change. Therefore, total assets do not change. They didn't give me a number, so I can't make an entry here. Okay, so let's get rid of that debit and credit. I apologize for that. All right, what about the second entry? What happens when you collect a receivable? All right, receivables are an asset. When you collect it, that asset goes away, but another asset, cash, increases. So for the second transaction, total assets don't change. All right, neither one of those transactions, for the reasons I just explained, will change your total assets. So what should the company now report as the total of its assets? Well, it had $800,000. I just proved that total assets will not change. So the correct answer, therefore, is C. You had 800 before, you have 800 after. Next, I asked you to try problem number 10. Let's see what it says. Okay, what are the two, that's a mistake, that should say predominant methods, for estimating uncollectible accounts? I told you that there were two. Accountants use both, but accountants far favor the second one to the first one. Why is that? Because the first one just tells you the amount of expense you have to record without considering how much is already in the allowance. It might be too little, it might be too much. Okay? The second method is going to do just the opposite. It's going to say how much do you want to end up with in that account, and then we'll record enough of an expense to get us there. That procedure is far favored by most accountants that I've had dealings with. Okay, but the answer is I presented it to you in the book and in my lecture. Let's look for it. The allowance method, percentage of assets, no, allowance. Looks like the correct answer is D. It's the percentage of sales method and the percentage of receivables method. So, correct answer is D. And that is right out of my lectures and out of our text. All right, two more to go. The next problem, here's where we start getting a little more comprehensive with technique, ladies and gentlemen. Problem 15 says, I like problems like this, by the way. Okay, we've got a company that has receivables. They have an allowance. The difference between the receivables and the allowance is our net realizable value. So 400,000 minus 23 equals 377. Now during the year, all right, that was on the first day of the year. Now during this year, we sell on credit for 450. That drives receivables up. We collect 380. That drives receivables down. And we wrote off $25,000. Okay? So if 6% of receivables are uncollectible, what is the ending balance for doubtful accounts rather, at the end of year 2? Well, you can't collect that until you know what your receivables are at the end of year 2. So to do that, we're going to create, I made a little copy of a T account up here. You see that? So I'm just going to do a copy job and move that puppy down to here. All right, and put it right there. Okay, and I'm going to call it, obviously, accounts receivable. I always recommend you use a T account, friends, and I'm going to put everything for this second year into this account. I had a beginning balance. It told me that I had $400,000 in that account. Write it in. We all know that it is a debit balance. All right, let me get rid of those pennies for us. Pennies are annoying. Okay, what else happens? We know, and you know, just for kicks, I'm going to put a second T account down here, and this is going to be my allowance for doubtful accounts. Okay, and we already know that that had a beginning balance, but it is a credit because it is a contra account of $23,000. Okay, and once again, let's get rid of the pennies. All right, so we have our beginning balances right out of the problem. Everything that we do here in class will look just kind of like this, so make sure that you follow my model. Let's ignore net realizable value for now. They gave it to us. We're more concerned with what's in these two accounts. So now, during the year, credit sales are 450. So write it in. Sales, 450. That increases our receivables. Collections decrease our receivables, 380. And I'll put here collections. So that's your beginning balance. That's how much you added. That's how much you take away. What else happened? We wrote off receivables of $25,000. We know that that's going to end up here. And the other side of that entry is going to be over here. We're going to use up part of what's in that allowance. So I'm just going to label that as a write-off. And I'm going to label this as a write-off. That was the entry we made. So far, this is how we frame out the problem. Okay. Now, we'll get to the 6% in just a moment. Let's find out what is in that receivable account at this point. So I'm going to come up here, and I'm going to draw a double line to indicate that I'm taking the total, whatever's in this account. All right. So I'm going to say, let's call this a prelim balance. Preliminary balance. Because I'm not done. I'm not quite done maybe yet. But I am going to make some changes down here to the allowance. Okay, let's think about that for a minute. Why do I have to change the allowance? Well, because I have not recorded my expense for the year yet, number one. Secondly, what have I got sitting in this account? I've got a $2,000 sitting balance, a debit balance sitting in that account. I certainly can't have that. All right, so I've got a prelim balance here as well. So let's calculate it. I take 400,000, I add 450, I subtract 380, and I subtract 25 grand. My preliminary balance sitting in this account is $445,000. I'm not done yet. What's sitting in here? Well, I had 23,000 sitting in here, and then I debited it for 25. What is that telling me? I ended last year with 23 in it, and I wrote off too much. Okay, if I really made a good estimate, there would be 0 in the allowance now. I provided for 23, I wrote off 23. But no, I wrote off more than I thought I would. So I actually end up with a debit balance in this account. I can't leave that there. My contra account has got to have a credit balance, and I have not provided a bad debt entry for this second year yet, the year in which we made 450 in sales. Now I selected a problem that used the better of the two methods, the percentage of receivables method. Okay, so I'm going to say 6% of receivables have to be estimated as uncollectible. Let's do that math down here. Okay, 6% of 445,000 is my estimate of bad debts, uncollectible accounts. It means the same thing. 445,000 times 6% is 26,700. Okay, now because I'm using the better of these two methods, okay, I want to end up with 26,700 in this account. Okay, so I'm going to call that my ending balance. All right, so that number is fixed. All right, that number is below. That number is right there. Okay, now what bad debt expense is reported for year 2 on Richmond's income statement? I'm sorry, I'm on the wrong problem. This is the one I'm doing. What is the ending balance? Now you don't have to go any further. All right, what we just did is we determined how much of an entry we have to make over here. All right, but the problem isn't asking that. It's simply saying how much do you want in this bucket at the end of year 2. Therefore, the answer is 26,700. The correct answer to 15 is D. It didn't ask you to make a, it didn't ask you to make an entry, so we can stop right there. That is your answer. All right. But now, just to make things interesting, we're going to do our last problem here, which is number 18. All right. Number 18, we are going to have to make an entry because they're not asking us. They're not asking us to come up with the balance in that account. They're saying how much bad debt expense report will be on the income statement. They are going to want to know this entry. Right. So, to solve problem number 18, what we're going to do is we're going to knit back up here to the very beginning, and I'm going to once again make a copy, and I'll take that little template and I'll put those right down here. 1 and 2. Okay? This one will be our accounts receivable, and the second one, of course, is going to be our allowance for uncollectible accounts. Like before, like the one we just did, let me hit save here, please. We're going to plug in all the numbers that we can, and then we'll start setting about to solve the problem. Now notice we're ending year 3 with receivables of 300 and an allowance for doubtful accounts of 15,000. Sales, you don't have to know that. Bad debts, you don't have to know that. Those two entries have already been made and they're included in these numbers. All right. So let's start framing out our accounts receivable with a beginning balance, sales, collections, and any write-offs. Let's stop right there and fill in the numbers. Okay, year 3, we end year 3 with receivables of 300. That carries over to the beginning balance of year 4, 300,000. Let me get rid of those annoying pennies again. Okay. Sales for this new year, year 4, we make another $1 million in sales. Collections, 800,000. Do we have any write-offs? Yes, 13 grand in receivables are written off as uncollectible. Very good. So I'm just going to draw a line there. And let's see what we have as a balance in receivables. We start the year with 300. We add $1 million in sales. We subtract 800 in collections, and we subtract 13,000 in write-offs. So as of right now, we've got 487,000 in receivables before we do our end of year work. Let's see what happens to the allowance. Let me even spell it properly for you. Okay, we started with the beginning balance in the allowance of 15,000. It's a credit now. Make sure you don't show that as a debit. Okay. We have not recorded any expense yet, but we are going to write some stuff off. We already know that. We wrote off 13,000. This was the other side of the entry. We debited the allowance. Now look, this time we went the other way. In the last problem, we didn't record enough. This time we recorded too much. We thought we'd write off 15,000, and in fact we may in future years, and we only ended up writing off 13,000. We've got 2,000 left in this bucket. So I'm going to put a little total here. Okay? I'm going to put balance, and I've got my 15 minus the 13 I wrote off. So right now, I've got 487 in receivables and 2,000 in my contra asset account, but I still have to make an entry for this year's expense. Okay? What is the amount of bad debt expense? Well, first I have to say how much of my receivables do I think I'll write off. It tells us, management says, 5% of my receivables I estimate I'll write off in the future. Okay, and 0.05 times 487,000, that was the number I think, wasn't it? Yes. Okay. So this would have been the answer to the last problem where it just said, what is the balance? Well, now it's not asking us that. Now it's asking us for the expense entry we will make. It's taking it one step further. Okay? So this is going to be the desired ending balance. And we just determined that that number is 24,350. So I need to make an entry to expense to get me up to this. I've already got 2,000 of it. So that means, do the math, in order to get there, if I've already got 2,000 left in my bucket, I need 22,350 more. This number is forced. We back into it. And that happens to be our answer. So I'm just going to highlight that in yellow for you. And I'll highlight that one in the previous problem for you to show that that is our answer. So, again, I had 2,000 left over from all of this mess up here. Okay? 2,000 left. And I want 24,350, so I back into this number. The correct answer, therefore, is going to be item B. All right, and that is it for our homework. I want you to study this very carefully for me because these are all questions that I've picked out of the end of chapter exercises as being takeaways, and that means we stand a pretty good chance of seeing them again as we wrap up our business preparing for our final quiz. Get in touch as always with any questions, and that will do it for today. Have yourself a good week and stay healthy. Bye-bye now.